Now speaking, Steph Wissink, Senior Vice President, Investor Relations. Good afternoon, everyone. We are pleased to share the strong results of our second quarter and our improved outlook for the year. Today, we have Walmart's CEO, Doug McMillon, and CFO, John David Rainey, joining us. After their remarks, we will address your questions. Our call is being recorded, and please be aware that forward-looking statements may be made, subject to risks and uncertainties. For more details, please refer to our press release and slide presentation on our website. Now, let's get started with Doug. Now speaking, Doug McMillon, Chief Executive Officer. We had a strong quarter with positive growth in units sold and transaction counts. Our comp sales for Walmart US were 6.4%, Sam's Club US was 5.5%, and international sales were up 11%. Flipkart's GMV was also strong. We are a people-led, tech-powered omni-channel retailer focused on helping people save money and live better. We are positioned for growth and can serve customers in various ways, including in-store, curbside pickup, and delivery. We are investing in technology, automation, store remodels, and new stores. Our data assets are unique, and we are excited about leveraging them with generative AI to improve the shopping experience. We have a sharp focus on ROI and are setting capital priorities accordingly. We are also committed to regenerative practices, such as supporting farmers to improve soil health and water quality. Despite economic pressures, our customers trust us and continue to prioritize spending on essential items. We are encouraged by the performance of general merchandise and expect growth in food, consumables, and health and wellness. Our stores and clubs give us a competitive advantage, and our curbside pickup and store-fulfilled delivery businesses are growing. We are constantly improving delivery speed, with many orders delivered in under 1 hour. We are prioritizing omni-retail and see opportunities in healthcare and financial services. We are focused on reducing product costs, improving execution, managing expenses and inventory, and delivering a great customer experience. We are grateful for our dedicated associates who make a difference every day. Thank you for your interest in our company. Now speaking, John David Rainey, Chief Financial Officer. We had a strong quarter with better than expected results in sales, operating income, and adjusted EPS. Sales were strong across all segments, and we gained U.S. market share in grocery. Our focus on saving customers time and money continues to resonate. Year to date, we grew sales by over 6.5%, adjusted operating income by about 12%, and adjusted EPS by roughly 8%. In Q2, constant currency sales increased 5.5% or more than $8 billion. Walmart US comp sales, excluding fuel, increased 6.4% with growth in both store and digital transactions. E-commerce sales were up 24%, driven by store-fulfilled pickup and delivery and advertising. We're seeing good trends in e-commerce with weekly active digital users growing more than 20%. In our international segment, sales were strong, up 11% on a constant currency basis, led by double-digit growth in Walmex, China, and Flipkart. E-commerce grew 26%, and we experienced positive store traffic across markets. Our strategic priorities include improving digital margins, scaling our marketplace, growing our advertising business, and enhancing our membership program. We're making progress in each of these areas. Our marketplace in the U.S. saw a 14% increase in customers buying items, and sales were strong in both consumables and general merchandise categories. Our advertising business delivered strong growth of approximately 35%, and our membership program saw mid-single-digit member count growth. On margins, consolidated gross margins increased 50 basis points, and we're pleased with the progress we're making in improving digital margins. Our second quarter adjusted operating income grew more than 8%, and our adjusted EPS of $1.84 was up 4%. We're maintaining discipline in how we're buying general merchandise during this uncertain macro environment. Our ROI declined 100 basis points due to charges incurred last year, but we expect a stronger ROI inflection in the back half of the year. Walmart US saw a 6.4% sales growth, with high single-digit increases in grocery and high teens increases in health and wellness. Our international segment delivered double-digit sales growth, with Walmex, China, and Flipkart performing well. Sam's Club had solid unit growth in e-commerce, up 18%, and saw strong in club traffic gains. Overall, we had a strong quarter and are well-positioned for the future. Now speaking, Doug McMillon, Chief Executive Officer. Our leadership changes were announced yesterday, and we are excited about the new roles and the impact they will have on our company. Judith has done an outstanding job in her 27 years with us, delivering strong results and transforming the business. Kath's experience and success at Sam's Club make her the perfect fit for the international leadership role. Chris Nicholas, who has a strong background in finance, merchandising, and operations, will continue the member obsession at Sam's Club US. Kieran Shanahan, with his 25 years of experience in various roles, will join John's team as our Walmart US Chief Operating Officer. These leaders bring a wealth of expertise and a focus on omnichannel retail. We are confident in their ability to drive our company forward. Thank you. Now, let's move on to your questions. Bank of America Merrill Lynch analyst Robbie Ohms inquired, Doug, could you please provide some insights into the positive trends you mentioned in general merchandise? Specifically, could you elaborate on the disciplined buying in this segment and what factors are contributing to your optimism? Additionally, have you observed any expansion of high-income customers beyond grocery shopping into other areas of the store? Doug McMillan replied, our run rate has improved compared to the previous quarter, thanks to a strong start to the back-to-school season. Historically, a strong back-to-school season sets a positive tone for Halloween and Christmas sales, which is encouraging. We anticipate that our food and consumables percentage to total in Walmart US will continue to increase, partly due to inflation and disinflation in the GM categories. However, GM is performing better than expected, and we remain optimistic about its performance in the second half of the year. John Furner replied, our team has made significant improvements in managing inventory and merchandising our stores effectively. The e-commerce team has successfully launched new products, such as the registry for teachers and parents, which have contributed to our back-to-school success. Additionally, our seasonal events and holidays have been well received by customers who are eager to celebrate again. We anticipate a strong holiday season and are prepared to adapt to market dynamics to ensure people can come together and celebrate. John David Rainey replied, we have observed significant growth in various general merchandise categories on our marketplace, including home, apparel, and hardlines. This trend highlights the evolving nature of our business, as we continue to expand our third-party assortment and drive double-digit increases in these areas. John Furner replied, yes, our recent Plus event showcased strong participation from marketplace sellers, indicating their confidence in our platform. The number of items available on our sites has increased nearly fourfold compared to last year, reflecting the growth in our seller count. Additionally, we are experiencing a steady increase in the number of customers. Our team, led by Tom, has successfully developed capabilities that will be instrumental in driving our future success. John David Rainey replied, in regards to high-income consumers, we are consistently gaining market share across all income demographics. In fact, in the last quarter, we saw an expansion in the number of categories where we gained share. This demonstrates that our value proposition, which includes not only everyday low prices but also convenience, is resonating with customers of all income levels. Convenience is a key factor that matters to every household, regardless of their income. Goldman Sachs analyst Kate McShane inquired, can you provide a breakdown of the contribution to gross margin expansion in the quarter between higher margin businesses, marketplace and advertising, and the impact mix from stronger grocery? Additionally, considering the more positive outlook for general merchandise, has there been any update to the mix assumptions and guidance for the second half regarding gross margins? Thank you. John David Rainey replied, the primary driver of our gross margin expansion was the absence of markdowns from the previous year. This was the largest contributor to our overall improvement. However, it is important to note that we are also making progress in diversifying and expanding our higher margin initiatives. Our advertising revenue, for example, increased by 35% in the quarter, and we saw a remarkable 60% year-over-year increase in the number of advertisers. This growth is a direct result of our increasing market share and customer base, which attracts advertisers to spend their money where the most attention is. This positive momentum demonstrates the interconnected nature of our business, where strength in our marketplace and other initiatives enables us to excel in advertising and other high-margin areas. TD Cowen analyst Oliver Chen inquired, how do you anticipate ticket and traffic for the next quarter, considering the conservative guidance and the strong performance in the previous quarter? Additionally, could you provide some highlights of your inventory price points assortment and how it relates to the upcoming holiday season? Lastly, with your expertise in computer vision and neural networks, particularly in inventory management, how do you see generative AI and LLM intersecting with Walmart Plus and the data you have on tech-enabled customer interaction? Doug McMillan replied, we have been working diligently to improve our data infrastructure, which will allow us to personalize our offerings to customers and members more effectively. This, in turn, will enable us to communicate in a way that demonstrates our understanding of their needs while respecting their privacy. Leveraging our own large language models, as well as those from external sources, presents a significant opportunity for us to enhance the customer experience and unlock various use cases. Additionally, we see great potential in utilizing this technology to improve our interactions with associates and optimize our supply chain. Overall, we believe that leveraging data and technology will be a long-term opportunity for us to drive top-line growth and increase operational efficiency. John David Rainey replied, in the second quarter, we saw a balanced increase of approximately 3% in both ticket and traffic. As we move into the second half of the year and compare against last year's higher inflation, we may see a slight decrease in ticket growth. However, we are pleased with the strength in units and the share we are gaining. Our value proposition is resonating with customers. Regarding the holiday season, consumers are being selective in their spending but have shown a willingness to spend during holidays like July 4th. Our team is focused on providing merchandise that meets their preferences. John Ferner replied, "Our focus on offering flexible options for customers has been paying off. We've seen strong transaction growth in e-commerce, marketplace, pickup and delivery, as well as in-store traffic. Our wide range of locations has been instrumental in meeting customer demands. Additionally, intentional rollbacks in general merchandise and other categories have yielded positive results. Customers are responding well to our strategic pricing adjustments, and our merchants have done a great job in aligning our rollbacks with customer preferences." Oppenheimer & Company analyst Rupesh Parikh inquired, "Can you provide more insight into the performance of your international business, particularly in China, considering your strong results in the face of weaker macro data in the region?" Judith McKenna replied, "Our international business had a strong quarter, with China and Walmex performing particularly well. Our businesses in India, Flipkart and PhonePe, also had a strong quarter. The success in these markets is due to our close proximity to customers and our ability to offer a combination of value and convenience. In China, we saw impressive growth in online and digital penetration, with both our Sam's Club and hypermarket formats gaining market share. Sam's Club had a particularly strong quarter, with new club openings and a focus on offering great items at great value. We also saw a trend of higher penetration of high-ticket items in China. Our hypermarkets have undergone a transformation, with reduced assortment, improved store layout, and enhanced signage to make shopping easier for customers. Both formats are leading in their respective segments and helping us attract more customers. Our associates in China are doing a fantastic job, and it was great to see their hard work firsthand." Citi analyst Paul Juez inquired, "How would you describe the current promotional landscape in the food and grocery industry compared to last year and historical trends? Additionally, how do you plan to utilize price investment as a means to increase market share, considering the evolving inflation expectations?" John Ferner replied, "Inflation rates have decreased compared to last year, particularly in dry grocery. We closely monitor price gaps and prioritize providing value to our customers. We are pleased with our current value proposition in the grocery business is gaining market share. We are keeping a close eye on the market and have implemented a number of rollbacks in the food category. While our general merchandise rollbacks are lower than last year, it is important to note that we were clearing inventory backlog at that time. Our general merchandise rollbacks are now more selective and aligned with seasonal trends. Moving forward, we are focused on preparing for back-to-school season, tailgating events, Labor Day, and the upcoming holiday food season." Kath McClay replied, "Instead of relying on promotions to combat inflation, we have focused on addressing cost increases by collaborating with our suppliers. This involves closely monitoring transportation costs and working with each supplier to assess the impact on overall costs and find ways to mitigate them. At Sam's, we have implemented a system where cost decreases are celebrated and passed on to our members. This approach aligns with our goal of prioritizing value for our customers rather than solely relying on promotional strategies." Morgan Stanley analyst Simeon Gutman inquired, "My question is regarding the factors that will contribute to the inflection in EBIT dollar growth. Could you please elaborate on the specific actions within your control that will drive this growth, such as advertising, sales leverage over fixed costs, or marketplace ramping?" John David Rainey replied, "We are pleased with our strong performance in the first half of the year, with sales growing at 6% and operating income growing at almost twice that rate. This is a significant improvement compared to our historical performance. Moving forward, our strategy will focus on further diversifying our earnings streams, particularly in higher margin businesses such as advertising and data ventures. This will contribute to an increase in our margins. Additionally, our supply chain efficiencies, including the automation of regional distribution centers and e-commerce fulfillment centers, are driving significant cost savings. As we continue to expand this automation across our network, we expect to see further benefits in our profit and loss statement. This gives us confidence and optimism for the future, as we anticipate growing our operating income at a rate that exceeds sales growth, potentially by a significant margin." Doug McMillan replied, "The automation work is progressing well and is a multi-year implementation of various automated storage and retrieval systems. This is contributing to increased productivity. Our business model is also evolving, with a focus on the digital percent of total and the growth of e-commerce. This transformation is not limited to Walmart US, but is consistent across our international operations as well. Omnichannel retail is becoming a key focus for our company." John David Rainey replied, "Our return on investment, ROI, is expected to experience a significant increase on a trailing 12-month basis by the end of this year. This uptick is even more substantial than what we initially anticipated at the beginning of the year. We had originally projected that the improvements in ROI would primarily occur next year and in the following years. However, we have successfully accelerated the realization of these benefits, resulting in a positive impact on our ROI for this year. BMO Capital Markets analyst Kelly Banya inquired, could you provide an update on the growth of e-commerce, particularly in terms of market share gains through pickup and delivery? Additionally, how is the marketplace and third-party, 3P, segment performing relative to expectations and how is it impacting the general merchandise comp? Looking ahead, do you see a similar opportunity for advertising profitability in the food and consumables segment, or is it more advantageous to focus on discretionary and 3P for e-commerce growth? Doug McMillan replied, we are very pleased with our performance, achieving a 24% growth. Our focus on supply chain optimization has allowed us to densify our inventory at the first mile, improve efficiency in the middle mile, and shorten the last mile. This has resulted in more e-commerce business and deliveries coming from our store locations, which now total over 4,700. In terms of measuring our success, we look at the number of transactions and customers, as well as what they bought in-store, what they picked up, and what was delivered. Regarding our marketplace, we are extremely pleased with the progress we have made. Our recent Plus event showcased the potential of our marketplace, with the majority of the revenue driven by marketplace sellers. We are grateful to the sellers who participated and helped our customers find value across all categories, including general merchandise. As for advertising, there are significant opportunities for both sellers and suppliers. We will continue to learn, grow, and experiment in our stores and on our site. Our goal with Walmart Connect is to connect our buyers, suppliers, and sellers to our customers in a way that enhances their experience. We want to ensure that customers can easily find what they want, when they want it. Overall, our marketplace and advertising businesses have shown strong growth, surpassing our e-commerce growth. Judith McKenna replied, Flipkart has shown impressive growth in the e-commerce and marketplace sector. It has consistently performed in line with our expectations and has been delivering positive contribution margins. The business mix is healthy, with strong performance in hardlines, particularly in mobile and electronics. The scaling of their ecosystem has not only contributed to the overall business but has also boosted advertising revenues. Flipkart's recent launch of luxury holiday packages through their ClearTrip business has been a success. Additionally, Myntra, the largest fashion online retailer in India, has introduced a My Fashion capability, which utilizes AI to provide personalized fashion recommendations. This showcases the potential of AI in the future. Overall, Flipkart is a great business, and we are proud to have been associated with it for the past 5 years. Piper Sandler analyst Edward Druma inquired, as you evaluate the success of Walmart Plus, what has been the most impactful factor in enhancing accessibility? Additionally, how has the data collected from Walmart Plus customers influenced business strategies and prompted any necessary adjustments? Doug McMillan replied, our focus on the core offer of our Plus membership has been instrumental in its success. We established the offer to limit delivery charges for customers, both from our fulfillment centers and stores. While we faced availability and inventory imbalances in the past, we have made significant improvements in the last year. We measure our performance through the perfect order metric, which includes the first-time pick rate and the percentage of orders delivered without substitutions. Our goal is to ensure that customers receive exactly what they ordered, when they expected it. While there are other benefits to our Plus membership, the core offer remains our top priority for execution. Barclays analyst Seth Sigman inquired, could you please provide some insight into how Walmart is currently managing its private label offerings compared to the past, and how this strategy contributes to its competitive advantage at the basket level? Additionally, do you believe this advantage will remain sustainable, even if there is a moderation in inflation or a decline in prices? Thank you. Doug McMillan replied, we prioritize offering a diverse range of products to cater to the varying needs of our customers across the country. Our goal is to be there for our customers, regardless of their specific situation. While we do not set specific targets or percentages for private label growth, we place importance on both our branded and private label items, ensuring that they offer value and quality. In recent quarters, we have seen an increased preference for our private brands at Walmart, which can be attributed to several factors. However, it is crucial for us to maintain the right balance of quality and price to sustain this momentum. Moving forward, we will remain committed to delivering exceptional quality and value across our portfolio, both in our e-commerce platform and physical stores. Kath McClay replied, from a Members Mark perspective, we have seen improvements in our value for money, NPS, and quality metrics. Members are choosing Members Mark due to the quality and innovation of our products, as well as the great value they offer in terms of price and quality. Doug McMillan replied, yes, we have observed a significant increase in leverage across various markets with our private brands, such as Great Value and Members Mark. Judith McKenna replied, yes, Members Market is available in our Sam's Clubs globally, along with a wide range of other items. During a recent visit to Chile, we observed a remarkable growth in the international foods aisle, which features a variety of private brands imported from different regions within the Walmart network. Doug McMillon replied, "While I understand that personal preferences may vary, it's important to note that private brand items like great value tomato ketchup potato chips can be popular among certain consumer segments. However, as a publicly traded company, our focus is on delivering value to our shareholders by strategically investing in and promoting our own branded products. We continuously evaluate consumer." Jefferies analyst Corey Tarlow inquired, "Can you provide an update on the health of your customer base in the U.S. and internationally compared to the first and second quarters? Additionally, what are your observations and expectations regarding shrink?" Doug McMillon replied, "Our company is well positioned to thrive in both challenging and improving economic conditions. We anticipate that customers will increasingly seek value, which will drive our top-line growth. While there are conflicting data points, we remain optimistic about factors such as employment and wage inflation. However, we are also mindful of potential weaknesses in consumer balance sheets. Nevertheless, we are confident in our ability to meet customer demands across a wide range of product categories and through various channels, including curbside, delivery, and in-store experiences. Our focus is on expanding our market share by delivering a compelling customer value proposition centered around price, assortment, experience, and trust. This strategy applies to both our operations in Mexico and the United States. It's important to note that our company is not solely a domestic retailer. With a presence in 19 countries and diverse businesses like Sam's Club, our approach to shrink management may differ from others in the industry. John Furner replied, "Shrink is an important factor in our margin, but there are other components that are equally important. Our priority is to offer the lowest possible prices to provide maximum value to our customers. Shrink has increased this year, but it varies across different markets. However, we have the benefit of cost savings in our supply chain and markdowns from last year. We are closely monitoring the situation to prevent any price increases. Our team is effectively managing both value and overall margin." Doug McMillon replied, "Shrink is a multifaceted issue that we address with a two-pronged approach. Firstly, we recognize the need for action to protect individuals from theft and crime in certain jurisdictions in the U.S. Secondly, we prioritize addressing the controllable factors contributing to shrink within our business." Deutsche Bank analyst Christina Katai inquired, "Can you discuss the membership gains and momentum in Sam's Club, including the renewal rate and the value of membership for consumers in light of moderating food inflation? Additionally, how do you anticipate volumes to play out in the back half of the year between private brands and national brands as rollbacks increase?" Kath McClay replied, "Our membership base has experienced significant growth in recent years, and this trend continues with an increase in absolute member numbers. Our tenured renewal rate has remained stable from quarter to quarter. We are constantly exploring innovative approaches to introduce individuals to the benefits of a Sam's Club membership. For instance, on our 40th birthday, we offered a special price for new members as a way to showcase the value of membership. Our goal is to convert these new members into long-term, loyal customers. Overall, we are confident in the robustness of our membership and the sustained growth it has exhibited." John Furner replied, "Our consistent growth in membership has been driven by the successful Plus event, which has yielded positive results across our entire business. The core of our offer, which includes perfect order fill rates and availability, is crucial in building customer trust. We have seen consistent growth in private brand volume over the past few quarters, and this trend has been ongoing since the beginning of 2022. We prioritize consistency and quality in our private brands, offering customers the choice between branded and private brand items. For example, our Great Value mustard has seen significant growth due to the value it provides, and we have been able to lower prices in the dry grocery category to better serve our customers." John David Rainey replied, "Private brand is an important indicator of consumer pressure, but it does not significantly impact our margin performance. Although the overall margin on private brand may be slightly higher, the dollar profit remains consistent. The shift in composition year over year is only 40 basis points, so it does not drive our financial results. Therefore, any reversion in this area will not have a significant impact on our business." UBS analyst Michael Lasser inquired, "Doug, given the positive changes in Walmart's e-commerce profitability, the contribution from alternative profits, and the potential improvement in general merchandise, do you believe that Walmart has better visibility into its gross margin rate for next year compared to previous years? If so, do you see this as an opportunity to increase investments in successful strategies that have led to market share gains?" "Thank you." Doug McMillon replied, "We are currently going through our long-range planning cycle and are excited about the opportunities to invest next year and over the next 5 years. We have a strong business and see opportunities to drive strong returns and transform the business for the future. We have an aggressive plan and expect ROI to increase over time. While it may not happen every quarter, we anticipate that operating income will grow faster than sales due to productivity and the shape of our business model. Overall, we believe we are being appropriately aggressive given the current environment. John David Rainey replied, "Absolutely, Michael. Just as you diversify your stock portfolio to reduce risk, we have taken a similar approach with our business. We have strategically built multiple income streams that go beyond brick-and-mortar retail. This diversification reduces our dependency on any one aspect of our business and mitigates risk. As a result, we are confident in our outlook and feel well-positioned for the future." Doug McMillan replied, "Our strategy remains consistent and we are confident in our ability to execute it across multiple fronts. Running great stores and clubs, as well as growing our e-commerce business, are both full-time endeavors that require dedicated resources and talent. We have the necessary resources and talent to successfully carry out our strategy. We are currently in execution mode and are pleased with the plan that is in place." Doug McMillan replied, "In response to the tragedy in Hawaii, our company has provided financial support to United Way and Red Cross, as well as essential supplies and merchandise. Our team on the ground, led by Chris Pierce, has done an outstanding job supporting the community. We are proud of their efforts. Moving on to our business, we are excited about the opportunities ahead. Our plan is to grow the top line and increase profitability through productivity and reshaping our business model. This will result in higher levels of return on investment. We are grateful for everyone's contributions this quarter, including Judith, who has made significant contributions to the company. We will miss her, but we are thankful she will be staying on to assist with certain matters. We are also excited for Kath, Chris, and Kieran, as Walmart has a strong team in place to continue our success. Thank you all for your time.